Stacia's kiddo. He is with us. So.
He's at lunch right now, just so everybody knows.
Oh, that's funny. Yeah. So good to see you, man.
Good to see you too.
Oh, there we go. I was gonna say he's eating M&Ms in my ear.
Yeah, very cool. There's Marvella checking in. Good to see you.
Hello, everybody.
Howdy, howdy. I'm still actually, Marvella, I may have an answer for you.
Okay.
So let me read this to you real quick. I just got this. New veteran equals totally new appraisal ordered. If it's the same veteran for the same property, switching lenders, for example, then that appraisal would stick. So it sounds like you have a totally new buyer, even though it's VA, they'll get a brand new appraisal. That's good.
I'm loving it. Yes.
Yeah, that's what we wanted. So,
yes. Thank you.
excellent, excellent. Oh, thank you guys. Thank you guys for being here. Really appreciate you guys showing up every week. I know I've got a couple of other people here that intend to jump in as soon as they can, but the launch class is going on right now. And so we have a couple of people in that launch class. They should be breaking for lunch from launch soon. So Brian, if you would, can you kick things off for us this week? We don't have Dawn or
That'd
Dawn.
be great because we are so swamped. I am in between closings. We haven't been able to attend all these meetings and like I should because it's just been record months.
Okay.
From really July, August, September has just, it's crazy. Everybody's either buying, selling, or refinancing, which is great, right?
There is.
But we do need that extra help, everybody does. Hey, so are you able to pull up, Jason, if I gave you the lady's name, are you able to pull up her contact information from your
Yeah, absolutely. Absolutely.
I mean, do you want it now?
Yeah, tell me who it is.
All right, so it's Jasmine Duncan from Rosenwomble. Just bought yesterday a home in Suffolk. She
Jasmine
works,
Duncan.
but her goal is real estate. That's what she really wants to do. And I figure, hey, she bought a home in Suffolk. She should be out at the Long and Foster office. And with all the tools and the extra things you give to the agents, I think, I'm hoping you can, at least be able to meet with her or connect. What's that?
I got it.
You got it? Okay, good. So
Perfect.
we've been so busy, but I had a list here of some agents that have used us. And if you've used us multiple times, please let me know. But Cordell, we just had one with you. Marvella, we've had a couple sellers with you. I know we're working on another one. Evelyn, Soren, I know you did one and a refi too, which is great. Sheena, I've got you down for a couple. Betsy Leahy, a couple. Sharon for a couple. Jason Gooden for a couple. Kelly Foster for a couple. We had one with Kelly Foster the other day that we put the overnight in the FedEx, right? And it was supposed to go to Portsmouth, Richard Campbell's office.
Yeah.
But the FedEx took it to Maryland instead. So the settlement office called us the next day and said, where's your docs? I'm like, we've got the copies here. And we tracked it down. FedEx didn't even have it registered at that point. So we knew there was a problem. So I called Kelly's client about 7 o'clock and said, please, can we just get this deed signed again? Because this package, they couldn't even find it at that point. So I was panicking.
Wow.
So we went out there and then they said, yeah, we'll sign the deed because Richard Campbell's office said, all we need, you sent us the copies already. All we need is a signed deed and we can go ahead and record the next day. Because then the FedEx showed up the next day and they said it was in Maryland. So I took it to the guy, they signed it, took it to Richard Campbell's office, put it in the door. They were able to record. But a long story short is like this FedEx, I thought it was reliable, but it never is 100%. And that's normally, if it's really close and we can drop the dock somewhere, we will. but this one was it wasn't really close at the time. And so I don't know if Kelly Foster knew that or not, but if she's on, we did that, and hopefully she got her check without a delay.
Who was the closer?
Who was the closer? It was with Richard Campbell's office.
I don't think I have one.
Well, it's been actually a couple, it seems like yesterday, but it was a couple weeks now.
Oh, then it's probably been paid.
Yeah.
That's really cool that you do things like that to support the agents in the transaction, Brian. I think that's there's a saying I posted on Facebook recently, and that there's no traffic jams on the extra mile, and I think that's a really good example of you and Sage going the extra mile to get the transaction done. So so thank you for all that you guys do over there. You rock.
Thank you. Thank you. We are going to have some courses coming up in October and November for CE. So I'll send out some invitations on that. One's going to be on fraud. Who doesn't need that, right? Fraud prevention. And then one in October is going to be on 1099 cash reporting, FERPTA federal issues during closings. So you'll get an hour of free CE from our underwriter. Who I know, Soren, you love this guy, right? Matt from Title Resources.
Wait, is that? Yeah, I think that's the one that is my favorite.
Yeah, he's your favorite. He's your favorite. So he's coming in. He's going to do the Zoom class October and in November. So you'll be able to pick up an hour on those topics. So that's something we want to do because, quite frankly, we hadn't been able to do a whole lot of anything, sales meetings, all Zoom, which I think it's good. It's a new wave of the future, but look forward to getting back to some kind of new normal and being able to do some more activities and things like that,
Me too, man. Me too.
Yeah.
I think we all are. We're ready for this to be over, no doubt about it. I can't wait till we can get back together and go over to B-Dubs and have a beer and some chicken wings.
Right.
Or chicken nuggets, as I like to call them. So I always get the boneless wings. They're basically nuggets.
Definitely nuggets. That's what those are, nuggets.
Hey, it sounds good.
Very cool. Thanks, Brian. Appreciate it.
Thank you.
So we have a very special guest with us today. I'm so happy that Lori is with us today. She's going to give us a reminder and a refresher on some of the benefits that we as Long and Foster agents have access to through the benefits program that they brought to us. What's it been? A year, 2 years ago?
It was a year in July.
Yeah. Okay. So really, really happy to have Lori with us. If you guys have any questions, obviously Lori is our designated benefits coordinator, and you're welcome to reach out to her. And so without any further ado, Lori, please take it away.
Awesome. So I hope everybody and their families have been healthy during this pandemic. And I wanted to make sure everybody knows that my email address, although it's been the same since January, it is different from last year. I've put my email address and my phone number in the chat for you to have. And the reason I say this is because we're literally changing servers on September 25th. And if you email my old email address that has AXA-advisors, it literally will go nowhere. So it's totally different than just, it used to be that your old one would continue, and not the case this time. So also want to make sure everybody knows that we have group health insurance. It does not go through me, but I could get you the information. It is both, we have both underwritten policy, and we also have telemedicine, which is 1-800-MD. And of course, we have dental, vision, disability, life, all of those things. The open enrollment for dental and vision will not be till March, unless you have something that's occurred that allows you to have a new open enrollment, which could be, you lost group insurance, birth, death, marriage, divorce, something like that. So if that happens, just contact me. You do have a limited time, but we can get you set up. So I'm going to go through some actually non-benefit stuff because there is so much happening financially in the world happening right now that I want to make sure that you guys are aware of. Because I wear two hats. You know, we have the kind of the insurance benefit hat, and then we have the, you know, financial advisor hat. So this is the financial advisor hat. So the market is recovering very nicely since our horrible down moment of March 23rd of this year. In fact, most of my clients are actually up for the year. We are possibly going to go through some volatile times between now and the election. It is normal. And other than in 2008, the market has always been up by the end of the year. And in 2008, the market being down at the end of the year had nothing to do with the election. It actually had to do with financial crisis. You guys are very well of that with the housing. You guys know what happened. So I have a lot of people who are concerned right now. But I will tell you, it's kind of like what happened March 23rd. The market will go down. It's a Ferris wheel. It will come back up. So don't panic during this time. So I want to go back to the CARES Act. I just got notified on Friday of some additional stuff. We have a legal representative with the branch, which is awesome because he keeps us up to date with stuff. So just as a reminder, if you are of an age that you take RMDs, which is required minimum distributions from retirement accounts, you do not have to take them this year. Even if it's an inherited IRA, you do not have to take it this year. PPP loans. For anybody who got a PPP loan, you know that you received the loan and that the federal taxes, and that's income. Federally, your taxes have been forgiven. That's not necessarily state taxes forgiven. In fact, in Virginia, they have not been forgiven as of yet. There is a bill in the House, I think it's Bill 5005 or something to that effect, that has been presented, but it has not been passed yet. So just a forewarning that if you did get a PPP loan, it is income. You do not have to pay federal taxes, but until the state passes that bill or a bill similar to it, you will have to pay state income taxes on that money. I'm sure that they'll probably get that passed, but I just want to make sure that you guys are aware of that. In addition, if you didn't get a loan, but you took a distribution from your retirement account, if that distribution was a loan, you've got 3 years to pay it back. If you don't pay it back, you will pay income taxes, and if you're under 59.5, there will be a penalty. If you just took a distribution and it wasn't a loan, you've got 3 years to pay back those taxes to avoid the penalty. So again, want to make sure you know that. Another thing that came up on Friday that really took me totally by surprise, and I didn't even think about it. If any of you who have children who are in college and you took 529 distributions for the 2019-2020 year, so this would have been for the spring semester, and it wasn't used due to COVID, you have to put that money back as a re-contribution, not as a contribution, as a re-contribution. Otherwise, you will pay taxes and penalty on that money, and it cannot be saved for the 2021 year. So I was blindsided by that. So I had a couple of clients, I hurried up and sent an email to make sure they knew that. So that's the CARES Act. Something happened that was passed before COVID that was called the Secure Act. I call it the Secure Act of 2020, which is a new rule. If you were over, it used to be your required minimum distribution age for your retirement accounts for 70.5. In the Secure Act, that has now been moved to age 72. Also in the Secure Act, it used to be there was an age limit in which you can contribute to an IRA, which was 70.5. Those age limits are now removed. As long as you're working, you can contribute to an IRA, SEP IRA. But however, if you are 72 or older, you can contribute, but you still have to take the distribution. So the other huge change that was made in the Secure Act was there is no more what we call stretch required minimum distributions. And this used to be a way in which people could pass money down to younger generations or someone other than a spouse, and they could stretch it. So for example, my mom passed away in 2016. When my sister and I inherited her IRAs, again, they became inherited IRAs. So because she was 74, I take RMDs, but it's based on my age versus my mom's. And so, you know, my accounts have grown, I don't know, 40, 50% since then, whatever it was. And so I can take that money now, I take every year, but it will go through my lifetime. And so it's nice because it's a way to pass money down to future generations, in which it's a gift that keeps on giving, in other words. That no longer is the case. As of 2020, there can be no more stretch RMDs. Anybody who gets an inherited IRA has to take all the money out within 10 years. Anybody who has had it during this time, like inherited this year, they're actually going to have 11 years to take it out because of the CARES Act suspending RMDs for this year. So that's kind of that, just general financial information. If anything I talked about affects you personally, or you want more information, please send me an email. We'll set up something, virtual meeting, in-person meeting, whatever. And we can talk more about how those changes impact you. Now I'm going to go back to the Durgaus program. I think I got a few minutes left. So I'm going to really push on the automatic contribution program. This is where you can take money out, set aside for taxes or retirement plans. So I want to push the retirement plans. This automatic contribution program is like setting up a 401k, like if you were working for somebody, because it just happens automatically. If you set it up and you put money in a pre-tax account, it's going to lower your taxable income. You can see I talk with my hands. So that you can pay yourself first before Uncle Sam, and you don't have to pay so much. You can even set up a Roth IRA. Just be careful if you set up a Roth IRA. There are income limits, whether you're married, filing separately, single, or married filing jointly. If you make above a certain amount of money, you can no longer contribute to a Roth IRA. The good thing is we can also set up a Roth 401k, which would allow you to save so much more than just that. And it bypasses the age restriction. So can do that. So Jason, do you want to show the PDF that I sent you?
Yeah.
So this is called The Cost of Procrastination. So this is why I harp on people to, we're human and we always want to, procrastinate. But saving for your retirement is not a time to procrastinate. So you can see that somebody who is age 25 has got 40 years until they turn 65. If they want to have $500,000 in their retirement account, then they would need to contribute $189 a month. This assumes, I think, like 6% average growth, which is pretty average. Let's say you're 35. Well, now you only have 30 years in which to contribute to get $500,000 in your account. So now, because you've waited, you're going to have to contribute $407 a month to get that $500,000. Let's say you wait 10 more years and you're 45. Well, now you've only got 20 years. Now it's going to cost you $954 a month in contributions to get to that $500,000. And of course, if you're 50 and you only got 15 years, now you've got $1,500. So it is so important. I always tell everybody, I don't care how much you start with. I just care that you start, because it takes a little bit to get to what I call critical mass, and in which the compounding effect really starts to really show beneficial changes to your account. So for example, if you got $1,000 in your account and you earn 10% that year, that's a good earnings, but it only adds $100 to your account. Let's say you've got $10,000 in your account and you earn that 10%. Well, now you've added $1,000, and that's what I call like the critical mass. Now it really starts to make some beneficial changes and really starts to help your account grow. So the sooner you start, the better off you are. It's never too late. You just may have to change your goals or how much you contribute, but again, it's doable and we can figure it out. The other thing I'm going to say that I found out with a lot of long and foster agents is that, and we're done with that. Thank you, Jason. is that a lot of Long and Foster agents are S corps, which is fine. And you guys have set that up because you want to lower what taxes you're paying to Uncle Sam. And that's a way to do it because you're getting paid a salary, and then you can also take owner distributions. Fine, no problem. But realize that your Social Security is based on that salary. It's not based on what your company earns. Therefore, what happens is if you are paying yourself a low salary now, you are going to cause your Social Security in retirement to be considerably less than if you just were taking, like you were a sole proprietor and paying those additional taxes. So my suggestion to you is take part of what those tax savings, take part of this tax savings amount, invest it in a retirement account. I don't care whether it's a Roth, pre-tax, or whatever. You don't need a pre-tax because you're already lowering your taxable income by having the S corp. So contribute to a Roth or a Roth 401k, and make sure that you are building up that additional account so that you can supplement your Social Security and you can live comfortably in retirement and do what you want to do. So I hope I didn't take more than 10 minutes. I tried to consolidate it. I know I've gone through a ton of stuff. All I can tell you is if you have any questions, please contact me. I have all my licenses. There's no charge for me to sit down with you, talk with you, again, either virtually or in person. So take advantage of it, and let's make sure that you guys are on a path to accomplish the goals you want to accomplish financially. Thank you.
I love it, Lori. Thank you so much for doing that. And thank you so much too for reminding us the benefits that we have. I just think that there are so many brokerages that don't offer this type of education and this type of, somebody to talk to like you, who has all of this experience and knowledge and licenses, and can talk to us about, 401ks and Roths and things that we don't maybe understand, obviously as nearly as well as you. So thank you for being there, and remind people, guys, when you're out in the field that, if you're talking to somebody that has questions about these types of things, that Lori is a resource for us, and she'd be happy to help someone who needs help. So I just think that's another tremendous benefit that we receive from being affiliated with this company. So thank you, Lori. I appreciate it.
You're welcome. I guess I should also say, if you need help or if you have family members or friends, I work with more than just real estate agents. Again, I'm here for everybody. Thanks.
Awesome. Absolutely awesome. So, John, I noticed that you were able to get in. Thank you for being here, man. I appreciate it. So, do you have anything from mortgage to add this week?
Not much has changed. The market has been relatively stable. Guidelines have been relatively stable, which is always a good thing in our world. One thing I'll say is that operations is taxed. So we are seeing historic volume flowing through our system. Obviously, that's a combination of both refinances and purchases. I'm sure if you don't know someone who's refinanced in the last 6 months, you probably are someone who's refinanced in the last 6 months, and you probably know 3 people who are in the process of it. So it just tells you how many people are refinancing, and for good reason, right? We have historically low rates. So with that said, you just couple that with a really robust real estate market, a lot of transactions coming through, and industry-wide, we are seeing delays across the board, from title orders to appraisals to underwriting to processing to verifications of employment, everything. And it's not for lack of trying. We are all striving to close on time. We are focusing more on purchase volume than refinance volume, because we know there's, if someone's already in a house, really, there's nothing impactful really if we have to move the closing date a couple of days. But if we have several families involved in moving, you move the closing date, we know how impactful that can be. So that's always our focus. But I just want to reiterate that make sure you give your clients a sufficient amount of time to close on your purchase stuff, purchase business. I mean, it's really, if anything less than 30 days is just really hard to get through. And again, it's not really necessarily prosperity all the time. It can be appraisals, it can be title work, it can be a lot of things. Sage has been really good of getting things turned around quickly, so it's not really them, but some other title companies, it's taking longer for title searches to come back. So just keep that in mind. I'd probably say that every single call, but bear with us. Again, we are all working really hard to get things closed as quickly as we can, but it's stuff out there. So, but appraisals, I'll say that appraisals are still sometimes having issues with value coming in. We're having multiple offers. We're seeing offers right now bidding properties up $20,000, $30,000, $40,000, $50,000 sometimes on a higher end house, but not as much on lower end houses. But and appraisals are having a hard time justifying the value. And then, so to continue on that same vein, we're seeing people put in their contract that they're willing to pay over and above whatever the appraised value is. So just keep in mind that for FHA and VA loans, you can't include in the contract any verbiage that states that the buyer is required to pay over and above the appraised value. So they are protected with federal law that basically states that they don't have to go forward with the transaction if the appraisal comes in less than the agreed upon sales price. Now, they can always choose to. If they want to pay more than the appraised value, they can, but you can't put wording in the contract that states otherwise, okay? Now, I'm trying to think of anything else to cover. Program-wise, we are seeing more flexibility going down to sub 640 credit scores. I know if you remember, several months ago, we were at a 580 before COVID. We went up all the way to 660 minimum credit score for programs. We've come down. Conventional, you can go down to 620, though I've never done a 620 conventional loan, but somehow, so nice, we can do one. We can do VHDA down to 620, so that's conventional and for FHA. We can do VA and FHA down to 640, but they are allowing exceptions down to 620. And we're seeing probably the next 30, 60 days, we'll probably see VA back down to, and FHA back down to 620. Another thing that Prosperity is doing as far as trying to improve their community lending is they're running currently they're trying to absorb some of the loan level pricing adjusters for sub 660 credit scores for FHA and VA to try to spur their community lending. So that's rolling through in a couple weeks or months. So you'll see that. And what that means is, so we could probably do the loan before, but we couldn't, the pricing would be impacted, right? And sometimes those are the people that need the best pricing to begin with because they have a tougher financial situation because, if their credit is not as good. So we're trying to help them opposed to them getting hit on their rate and they're already having financial problems. So we're trying to help there. Obviously for VHDA, it doesn't matter if you have an 800 or a 620, the rates are the same for VHDA no matter what your credit score is. So that's a good thing there. But for every other product, especially FHA and VA, especially in this environment where we are right now, we're seeing loan level pricing adjusters of maybe up to a point or more from a 640 to a 680. So there's a huge, between 640 and 680, there's a massive swing in what rate you could get charged for FHA and VA. So we're trying to absorb some of that impact and be able to provide some better rates to those borrowers. So you'll see that coming through. Other than that, it's kind of just staying stable and getting things through and trying to process all the volume. But yeah, any questions that anybody has about processing or underwriting or the market in general?
I was on the webinar, the appraisal webinar on Monday, I believe it was. And one of the things that the speaker, I don't remember his name. I'm sure you probably know, John, but he was
Was it Brian Quinlan?
Yeah, there you go. Yep. Chief appraiser for Prosperity Mortgage. And one of the things he said that really stuck with me was, we have approximately 140 million homeowners in the country. And just about all of them are refinancing. And we've only got 45,000 appraisers nationwide. And so you can imagine how busy these 45,000 appraisers are when they're looking at 100 million potential refinances or purchase, including the purchase business. I mean, I just think it's staggering what's happened to this real estate market since the dawn of COVID. It's been crazy. It really has. And I think that, Stacia was showing me some numbers yesterday, and it looks like we had another remarkable month in August. So it's just been month after month.
Hello, how are you?
Good.
Well,
Big-
I'm glad.
Oh, hold on. Gotta mute somebody.
There we go, Dudley.
All right.
Really big numbers for our office. And so
Yeah, we had 20 transactions in August and 5,771,195.
Wow.
Some
and last year, pre-COVID, our goal was to do $3 million in ratified contracts each month, and every month since we have just blown that away. So it's really remarkable, and I can't thank you guys enough for being willing to work through the pandemic and get the job done. So thanks to all of our core partners and everyone involved and associated with this office. Thank you.
Hey, Jason.
Yeah.
Just want to give a shout out to Sage, Brian, and Kelly and Debbie at Sage.
Thanks.
They're who I use to process my refinances, and they work. I mean, I talk to Brian and Debbie up until 7 or 8 or 9 o'clock at night all the time, and they work their butts off to get the transactions closed, and they're so good at problem solving. And I just want to let them know how much I value
Thank you.
the relationship we have with you guys, and how much hard work you guys put into things. So
Yeah.
thank you guys.
Thank you. And I
Here.
love that. I love that new hybrid closing, John. That's awesome. That hybrid takes a lot of time off our end. And so we did one earlier this week, and it was like the documents, all we had was really the note, deed of trust, and just a few docs. It looked like less than a seller side. And the other docs
Yeah,
were
if you guys are
signed.
late if you guys attend the closings for your buyers and you're late, you might miss closing because there's a lot. We've transitioned most of the documents over to electronic signature the day of closing, so they're really only signing the ones that need to be recorded that require wet signature. So that's it. I mean, it makes it a little bit less dramatic. You just sign 3 or 4 pieces of paper. It's like here's the key, which is it's great, right? But I'm glad that that's been rolling out well. There's a little kinks there at the beginning when we first rolled it out, but it seems to be that everyone really likes it.
The rapid close. Very cool.
Marvella's got something. I see her hand up.
Yeah, I have a question for Jonathan. If Jonathan,
Mm-hmm. Yes.
okay, you made a comment. I don't want to misquote you. This is what I understood. If it's a VA or FHA buyer, they can offer more than what the house is appraised for, but you can't put it in the contract, right?
That's right. You can't have verbiage in the contract that stipulates a requirement of the buyer to pay more than the appraised value. So it's called the escape clause, and it's in our contract. And you could scratch it out, if you wanted to, but it's still law, a federal guideline for utilizing the program, and basically states that they have the option, right? So it's basically I'm trying to think of you could put something in there that the borrower intends to, though is not required to, pay more than, or they understand that they're not required to per this escape clause. However, their intention is to pay more.
Okay.
The prerogative or something like that. But to make sure you guys know that it's not enforceable, right? So you can't put in that the VA buyer is going to pay up to $10,000 more than the appraised value, and then the seller comes back and then maybe they don't want to do it later, and the seller comes back and says, hey, you told me you agreed to pay it more. Well, really, you can't do that. So the VA buyer still has the option to go ahead and walk away and get their EMD back if the value comes in less than the agreed upon purchase price, no matter what you put in the contract. Again, just to go back and say, to reiterate, if either FHA or VA, if they want to pay more, if they want to pay more than the appraised value, they can do that if they have the money to do it, obviously. But what that means for the loan is that the loan is based on the appraised value or the sales price, whichever is less. So if we basically toggle the sales price down to whatever appraised for, and then let's say there's a 3.5% down payment for a FHA loan, 3.5% of that appraised value plus whatever is over and above the difference between the appraised value and the sales appraised value and the sales price, right? So if it's 3.5% of 200,000, that's $7,000. But you sold it for 205, it'd be 7,000 plus the difference. So it's not just like 3.5% of the total amount of the 205, for example. It would be 3.5% plus just the delta between the sales price and the appraised value. So just keep that in mind.
Okay. So my question was going to be, how would you word it? So, but you answered that in your
Okay.
explanation.
Yeah,
Thank you.
of course.
Cool. Cool. And Lori, just to go back to something that you said, you had mentioned open enrollment is in March. Is that for all of the benefits, like the disability and that sort of thing?
No, so open enrollment is only for dental and vision. You can sign up for, if you're not in your guaranteed issue, you can sign up for life or disability anytime. We just have to go answer some underwriting questions.
What about the health insurance plans? Is there a certain open enrollment period for that?
No, it is open anytime.
Wow.
So people can, if people want to look into the underwritten or the telemedicine, again, just contact me and I'll send them the information.
Good to know. Good to know. Anybody have any questions before we close up? All right. Very good to see you guys. Happy Wednesday. So hump day once again, Bella. Mike,
Yes.
Mike.
Okay.
That's right.
Yep.
That's right. So all right, guys, you guys be good. Have a good week. Stay safe and profitable. And we'll do this again next Wednesday.
Thank you. Bye-bye.
Thanks.
Bye-bye.
Bye.
Bye.